another video. I told you guys that I'll be doing a midweek outlook post CPI. So we've had the CPI today. I'm sure a lot of you guys were paying attention. CPI caused pretty big movement across the markets generally. We had PPI yesterday on the Tuesday, which was pretty uneventful, but CPI has definitely set the tone for the week. And we discussed these things in the actual weekly outlook. We were expecting a midweek reversal, what the possible scenarios we want to see, what are the potential targets. But as ever, the market always changes. It won't play out exactly how you expect. So it's very important you learn to adapt, right? So we'll touch on quite a few things, right? Now, the first thing that I want everyone to realize is that last week said, potential scenario is based on where the week is, we see a potential previous weekly high sweep, which was a good read. We got that, and then we see a reversal. And then if we can get some good displacement, then we could see price head towards this zone. Now, this was something that I actually mentioned in the mentorship chat today as well. Potentially we can see price trade towards this if we have a very strong daily closure through this fair value gap to, sort of show price is intending to go lower rather than reverse from here, right? And when we have our bias, it's very important to use these if and when statements, right? Bias is never concrete. We say if X occurs, then, it makes it much more likely that, if this candle had or is going to close somewhere down here, then it's very likely we are about to target this. But the way it has closed now, right, respecting this fair value gap, displacing away, right, especially on a lower time frame, you've got that market structure shift, very textbook. It's likely we are going to head higher from here, right? So let's consider a few things, right? We have Monday, Tuesday, Wednesday. You have 3 days in the week so far. All 3 days have primarily moved down. You had 1, 2, 3. The third candle is now CPI. It has traded into a daily fair value gap. It has hit a daily order block, which also happens to be OTE, right? And it has now also traded away from those high time frame arrays, creating lower time frame displacement. What this means for you is that it is setting the bias in the short term. Sure, okay, we're bearish on the DXY. We talk about it a lot when we make these weekly outlooks. Overall, we're waiting for a reversal, etc. But it's very important to zone in. As intraday traders, right, sometimes all you need is what's the next daily candle? What's the next 4-hour candle? What's the next, hourly candle? If today's daily candle closes anywhere close to how it is right now, which is likely, I'm not really expecting more movement for the rest of the day, and it's already starting to go sideways, then it's very clear, based on this daily candle, right, guys, you're expecting that next daily candle to trade higher, and from there, even higher. So now, our buy-side targets can easily become, right, we'll start off with, first, the range high, and this is going to be the previous daily high tomorrow. Once tomorrow's trading opens, these are two very easy targets for us to work off. On top of that, I would not anticipate today's low to get swept, as I've said, based on this closure. So you have a range to sort of work off of. If you're a swing trader, this is a good opportunity for an intra-week swing. You could just OTE this range, set a limit perhaps on something like this fair value gap, and wait to see when price can offer that move all the way up, picking off high 1, which is going to be the previous daily high tomorrow, these targets, and of course the sort of medium-term target for now. So that makes it very clear, right? We have the bias for the remainder of the week. We've sort of pivoted. We knew that, we were sort of watching for this area, but it doesn't look like price is going to give that to us just right now. So what do? We play level to level for now. We just let price take these targets, and then once these are taken, then we reassess it with next week and next week's news events. Now, another quick thing that I would like to touch on is that, some people get very, sort of hyper-focused on the bond yield. Now, the bond yields have done what we expected, right? They've taken that liquidity pool. They're having some displacement lower, but the DXY is not following. Why, right? It's less a matter of why, right? I'll tell you guys why. Because there's a lag between them. They don't always move in synchronicity. When they move in synchronicity, right, when they move together, when we have the bond yields flying down and the DXY is flying down, we get something called a low resistance liquidity run. That's essentially when, it's sort of like, that first market structure shift happens. Then after that, price just melts. It just flies to take profit. Right? It's literally in the name, low resistance. There's no resistance in that liquidity once we have that sort of reversal or prices, set into a program. Now, in this scenario right now, of course, the bond yields are doing what we expect, and DXY is sort of moving off track in the short term. That is fine. That happens. That's not the first time. If you go back and line up every single daily candle with the DXY, they're not going to match up. Right? It's just not how it works. But it's sort of across the higher time frame where it is more important for us. So what that means for the time being is, we may not be getting those low resistance liquidity runs, but we do have a very clear bias with DXY. And when you have that, you don't always want that to be altered by the fact that, the bond yields have printed one daily candle low. Right? Unless this was like a crazy candle that just nuked the chart, I wouldn't be that concerned. Right? It's happened before. You have these sort of large candles, and I'm sure if you go back and put them side by side with the DXY daily candles, it doesn't match up, and it probably also didn't majorly affect the trading in that day or the day after or the day before. Right? So cool. You can see cost still not better. So cool. We knew from here, once price started heading higher, we were looking for buy side targets. It's actually tagged out quite a bit of buy side now, right? It's run through a lot. One more. Cool. So as you can see on the 1 month chart, it's nothing special. EURGBP in a sort of normal sideways movement. Overall, this is the drawn liquidity for us. We've taken a good bit of internal liquidity now, but we have, sort of left this one standout high, is what I would say, that price can potentially still reach for, right? I would consider all of these highs, right, under this sort of line, very flat and equal. And what price has done so far is sort of just matched up to this rather than sweeping it. So before we get a sort of, massive reversal by any means, I would anticipate that price trades higher still. From here, we have this sort of OTE range on the 4 hour. I want to see this hold. We could sweep this internal liquidity, but I think for the remainder of the week, we want to see the EURGBP go higher. We want to see it trade higher towards that target. So then when the following week comes, we can have one final sweep and then start talking about a potential reversal. But for the time being, I'm looking for higher price on EURGBP. If it looks like price is dropping quite hard, especially as we come into the sessions tomorrow, and it's quite close to these liquidity pools, then it's very likely we will sweep all of this little trend line, come somewhere into this fair value gap, and then continue to move up. But for now, I'd ideally want to see price move up from here rather than retracing deeper just yet, and leave the sell side liquidity intact for later. And in that case, right, because we're looking for a bullish EURGBP, looking for a bullish dollar as well, that makes for better shorts, right, on our GBP USD. We come and look at our daily chart. Not amazing here, but what we do have is quite a large range, and we have places for price to go. Now the first target will obviously be trading lower, clearing the sort of large AMD. We have accumulation, manipulation, distribution. If we come over on EURUSD, it should be very, very similar, right? Slightly cleaner, if anything, right? We have very clear reaccumulations, initial consolidation, reaccumulation, massive reversal here, and then from here we want to see price trade lower and pick up these targets. Both charts are looking quite nice for this. I would say EURUSD does look a bit cleaner, but of course, as you come to your trading sessions, have a look at EURGBP, see which one is more favorable, see if there's any SMT being shown, right? And we'll take a quick look at Bitcoin. Did get a bit of movement, right? Very interesting chart. So on Bitcoin, right? What we've had is sort of a large move up here, taking a lot of internal liquidity, Then we've had that delivery to the sell side, sweeping all of this sell side liquidity that was engineered for ages, and now massive displacement. And when we come on the 4 hour, this looks, what I'd argue is even cleaner. We've got a very nice manipulation down, taking a lot of liquidity, followed by the displacement higher. And I would expect this to continue for now. For now, we want to see Bitcoin trade higher. I'll definitely mark this high. I think this is quite imminent for Bitcoin to reach. And then potentially after that, even the all-time high maybe reach once more, right? Because, sorry, the argument we can make here, right? We've got the previous weekly low sweep, all of that internal liquidity sweep, and we have our previous monthly candle swept as well. And of course, now we're seeing that sort of valid displacement on the lower time frame. When I see a chart like this, if price continues higher, right, we still have half the month left. But if we push higher, right, and we aim for this, then it's very likely that following monthly candle will also be expanding in this direction somewhere. 120k, if you guys remember from the start of the year, will be looking like a very, very viable target sooner than a lot of people probably expect, right? But of course, just depends on where price goes from here. For now, play the short-term target. I know price has swept it, and I think the likelihood of us sweeping instantly again is pretty low. But what we could get is a delivery from this sell side to just this internal buy side, and then more sideways movement. Like, it wouldn't surprise me. It's not, it wouldn't be the first time Bitcoin's done that. You guys see it here, right? Big sweep, trades back into the range, some internal liquidity swept, sideways, right? So don't get fixated on the idea, but it's extremely likely we're taking out this buy side for that. Cool. S&P also giving that sweep that we wanted. Monthly candle also with that previous monthly low sweep, displacement higher, very nice. The weekly candle shaping up how we expected, sweeping the previous weekly low and the sell side target. Coming to our daily chart. And we've traded sort of into this market maker buy model that we've been expecting. We wanted to see a run on that liquidity, then sponsor market maker buy model to go higher and take these targets. Now, one thing I would definitely be wary of is this is buy side liquidity being engineered. There is a small chance that this may still yet be a fake out, especially because we're considering we're anticipating the DXY to trade higher here in the short term. The price still has a bit more of a push down before the move up, right? If we can get a strong close above this buy side liquidity over here, then it's very likely we pick off this and we pick off this and we start trading higher. Right, but like I said, we've sort of hit that sort of engineered trend line, the veto trend line, and it wouldn't be an area that surprised me that we sort of get a retracement or a short-term, move down before we get that the real sort of move on. But yeah, guys, that's how I would play it. I would definitely pay attention to this fair value gap. If you can get a sort of eye or fed into this, then it's very likely that you can aim for this high that will be left over here and then higher. If price seems to be displacing lower, just respecting this, then of course, what to be aiming for. But yeah, guys, that is it for the midweek outlook. I hope that's been helpful, specifically on how to sort of adapt your bias. We laid out the expectations coming into the week. Some of it played out how we wanted it, some of it didn't. Perfectly fine, no damage done. And now midweek, I'm doing the same for you guys. You see the expectations specifically for the daily candles going into tomorrow, the day after, and what we want to see from price. And, from there, you can build a plan. How am I going to play those candles? Right? But yeah, guys, any help at all, anything you guys need, suggestions, etc., just leave them down below.